Welcome back, folks. Today we're going to be going over the 15-minute model, the rules, the look back, how it's supposed to print, and so on. As far as the pattern, nothing changes. Everything is always going to be the same principle. A breaker or CISD, sweepable prints. We sweep that sweepable. Then we create a new changes to the delivery to the downside on the 1 minute and or the 5 minute. Preferably, it has both lined up nicely, but you can take it just off the 1 minute right away. So yeah, same pattern, same rules as far as that goes. Nothing changes there. You're still going to be utilizing only 2 bullets. Okay. So no more than 2 bullets per setup. You're not going to go for a third, fourth bullet just because it's a higher time frame and it requires more attempts. No, it doesn't. 2 bullets. After that, if it's not going, most of the time it's just cooked overall, or it's going to require higher time frame like the 1 hour to make the price action turn around. So the look back period on the 15-minute model is going to be 2 days. That means that if something forms, for example, Monday, which is all this price action is for Monday. If something forms here on Monday, it is good up till Wednesday. Okay. Once Wednesday closes, so once Wednesday gets to this point, it's no longer good. So let's say we come all the way down over here and there's sweepable on this left side from Monday. I would not use that. It's invalid. Okay. At that point, it's no longer going to be high probability. You will see, however, reactions out of that specific sweepable sometimes, or that BC or CB, but it is not something to be playing at all. It's not a trade to be taken at all. The reaction sometimes might be nice. It might even give you a strong reaction, but for the most part, they're going to get swept almost immediately. If not, after the reaction that, gives you just a tiny bit of profit, it will sweep it. So you just don't know how to calculate if it's going to be a long-term move or not from something that's older than the 3-day period. Preferably, we want it to be within 2 days. So if it happened on Monday, we want it to be swept by Tuesday. That's the ideal world. If it happened on Monday and it gets swept Monday, that would be even better. But as long as it happens within, again, a day or two, then we're okay. Okay. 3rd day, it's fine. We just want it to be the sooner, the better. Okay. So let's just go over some examples of what the pattern looks like, because it's the same thing that we've been talking about always. So we have a low, a high, a lower low, a higher high, even as a change in set of delivery. So this is your CISD. That would be the first step of the pattern. After that, you're going to look for a sweepable, meaning a high, and then for it to print a low, and then to print a high. So let's zoom in here. We have a low and we have a high. So this one is a little bit harder to see, but this is a high, this is a low, this is a high, and then this is a low. And then it sweeps, it sweeps afterwards. Okay, I know this is funky because this candle had already printed, but this counts as a sweepable. And so in this same area, just zoom in, go to 1 minute. Okay. So in this same area, once that happens, what do we see? Of course, we got our 1 minute breaker to the upside after this candle had finished printing, giving us our breaker to the upside, and we see 4 standard deviations. Once it reaches 4 standard deviations, it pulls back to 2.5, which is a halfway pullback. And then we just continue off doing whatever. So on that same area, if we now go on the 5 minute, so low, high, low, and mark that, let's go back on the 1 minute. So the standard deviations look a little bit different. This is the 1 minute, right? It goes to 4.5, pulls back to 2.5. And then the 5 minute continues all the way to 4 standard deviations. And then, of course, we see it turn around and come back down. So the 5 minute works with the 15 minute. The projections that come out of a 15 minute sweepable, you ideally want them to become not only a 1 minute breaker, but to become a 5 minute breaker. Because between the 5 minute and between the 15 minute and the 1 minute, there's a time frame, which is the 5 minute, right? Like it's just a gradual thing. So from the very first class that we talked about, continuations, the whole idea of the model is this. You have a high time frame move, right? And you want to fractalize it to be a lower time frame. The lower you go, the better the risk reward is. but the harder it is to find the actual pivotal point. So the 1 minute makes it so that we can find this pivotal point fairly well with a really high win rate with really good risk to reward. And then the higher we can go on the time frame as far as calculating this pivotal point, then the better it is. So when we have a 15 minute, we look for a 1 minute breaker because it gives us enough accuracy to where you only need 2 bullets still. But now you get to see moves like this, where the 5 minute is actually way bigger than the 1 minute. So sometimes you can hold those for longer. Now, personally, what I'm going to teach you guys is to still just go for 4.5 standard deviations and take your profit. Most of the time, there will be a second trade that comes out of this move that will allow you to attach yourself onto the next continuation leg. It's not going to be on the 15 minute. Okay. So you're not going to see this 15-minute play come out and then another 15-minute play come out right after. It's going to be a 15-minute play and then a 5-minute play will come out afterwards. So in this specific scenario, if we just zoom in on the same area, after we had the CISD here on the 5-minute, mark it out, we would look for a sweepable, which is high, low, high. Oh, this one actually didn't have another play that came out of this. At least not yet. Let's see if it does overall or not. No, this one didn't actually have it because the sweepable is here. But the point is, you basically will have a second play most of the time. Now, the BC plays are all the same. So in this one, this BC didn't get tagged. But the way you would, well, no, it actually did. I'm sorry. It did get tagged. BC starts here. So BC, so a sweep happens here, right? So sweep happens. We didn't have the BC. The BC has a volume imbalance here. That volume imbalance gets included onto the BC, making this the actual area. So now let's go back on the 1 minute into that very specific zone. So once we work ourselves back into it, right here on the 1 minute, we then create another 1 minute breaker to the upside right there. That gets confirmed on this candle. And then what do we get? 4.5 standard deviations out of this same area. So that's basically how you want to treat this. You want to do the same stuff, CISD, sweepable, sweep, and then 1 minute breaker. And then ideally, it has a 5 minute to go along with it. On this BC plays, for the most part, I would love to get candle 1 the first time around. But if I don't get candle 1, sometimes I'm okay with taking it, knowing that there's going to be a second sweep to get to candle 1. Sometimes I just skip it unless there is a candle 1. It just depends on the context and how clear it is that we're bullish or bearish on the day and why I should be. If we're very clearly bullish or bearish, then you have a very clear answer on why you should do. You should just take the first bullet. But if you are unsure or price action doesn't seem to really be wanting to go up, or you think the draw is wrong, just skip the bullet, wait for the second one to happen. And then if the second one happens and you finally take that one and it loses, well, now you know that bullet 1 loss, bullet 2 loss. It's likely just wrong. It's going to go the opposite way. As far as the pivots go, pivots are the same thing. Again, if the 15-minute it's going one way, but then it fails a couple times that way, then for the most part, you're going to notice that it's just wrong overall, and you're going to be able to, much more easily pivot to the other side. This 15-minute plays don't show up as often. So you're not going to have Asia play, London play, and New York play that are going to be 15 minutes. They're only going to show up maybe once or twice during a session, if they're going to show up at all. Okay. So maybe today they're going to show up one time in London, maybe one time in New York, maybe one time in New York tomorrow, and maybe one time in Asia, and so on. But they're not going to be consistently on the chart because, of course, it's a 15-minute. It's higher time frame stuff, so it doesn't happen as often. But when they do happen, you just got to be prepared for them because they do create quite big moves, so you can catch much better position for a bigger expansion if your draw is correct. If you think the draw is heavily going to deliver that 15-minute breaker, it allows you to target the full 15-minute breaker. So from this breaker down, from this bottom all the way to the top, like if you knew for whatever reason this was going to be holding. So let's go into the left side here. Never mind, this left side is not a good example because the sweepable is not even there. Yeah, I mean, again, this just doesn't show up as often. I'm not going to try to find any examples up close, but just go and look for it. It's the same thing that we've been talking about. You just want to look for the same areas, the same mindset. Everything is the same. It's just the entry is lower time frame. Like CISD here, right? And the sweepable would come out of here. He doesn't get swept. He leaves. When he comes back, he just sweeps here overall. So there's no trade, right? Here, CISD sweepable is here. When he comes back, he sweeps it, but he takes out the breaker. So again, there's just no trade. There's nothing for you to do. It doesn't cause a bunch of losses on like a bunch of other stuff that usually cause a bunch of losses. But, you know, it does come with the territory that it doesn't show up often. So, yeah. Yeah, let's go over this example, actually. This is a pretty good one of a one that probably we get a lot of questions about. So high, low, higher, lower, low, and then higher, high. That's a CISD. I know there's a gap. That's a new day opening gap. So that counts as a close above. As long as this candle is an up candle or any of these candles are up, that counts as a close above and it's a CISD. So once that happens, high, low, high, that is our sweepable to work with. Okay, that's our sweepable to work with. There's our 1 minute breaker in there. We're going to zoom in just a second. And then this would be bullet number 2. And then we'll zoom in on bullet number 2 in a second as well. But yeah, so bullet number 1 is here. This high made the lowest low right here by just a little bit. But this is a bullet. And then it gets ran one more time. Once it gets ran, we're looking for a breaker to the upside. The earliest breaker would have been right here. And then once that breaker is made, you should be triggering that. That's below number 2. Goes to 4.5 standard deviations and beyond. Now, again, this is a little bit harder to spot because of this gap, but it is valid. The other thing that we get out of the same play here is going to be our BISI. Our BISI comes out of here. That's the first BISI after the sweep. And so on that same area, if we now go and zoom in and look for the BISI play, it comes out of here. So we grab this bottom all the way to this top. High, lower, low, higher, high, giving us our next projection. And our next projection goes to, let's see if it goes to 4. And it goes to 4 and beyond. So that's basically how you want to be utilizing this 15-minute sweepables. Like here, obviously it went way higher, right? Like it went absolutely higher than what you originally had marked out. You would have gotten way more R. But that's my point. Like 15-minute breaker, 15-minute sweepable, second bullet, and it goes to 4.5, which is where we picked that. And then after that, we started dropping back down. And I don't know if we swept this again. Yeah, so we swept this again. But this projection gave us literally, this is Tuesday. Okay, this is Tuesday during Asia. This is Wednesday, actually. And that gave us the peak of the day at 10:30, 4.5. And then we literally 180 from there all the way back down to the other sell side. So a 15-minute sweepable then creates a 1-minute breaker that you want to become a 5-minute breaker. Then you want to become a 15-minute breaker. And then you project that out. Typically speaking, you want to target 2 standard deviations of the 15-minute breaker if you're going to target anything more than the 1-minute breaker projections. Again, for you guys learning, just do the 1-minute breaker to 4 standard deviations and move on with your life. Don't try to aim for anything more than that right now. Later on the series, we'll talk about examples on when you should hold and whatnot, but it's not necessary at all. It's just not needed. And it's going to take way longer to deliver than you want it to. And so if you're wrong, you're going to be really sick when you're wrong because it's going to literally eat up the whole day and you're going to end up losing, your trade anyways. But when you're right, it is very rewarding because you do get a lot of R out of that trade, but you're just not going to find them as close as possible. That's why we go with the 5-minute model. That's why I started with that because it is the thing that gives you more trades per day. But this is something that you have to keep in mind. If the 5-minute does not align with the 5-minute, if the 15-minute does not align with the 5-minute and the 1-minute, then the 5-minute and the 1-minute are wrong usually. So every move starts from the lower time frame onto the higher time frame in terms of the formation of that higher low. That's obvious, right? There is obviously a 1-minute move here. There's a seconds move here, right? But the thing is, what determines when this stops here? That's the question you got to be asking yourself. Why should it stop here? Why should it not? It's because of the higher time frame. So if the 5-minute says we're going up right here in this area, but the 15-minute already is done going up and it needs to pull back, then it doesn't matter what the 5 minute says here, and it doesn't matter what the 1 minute says here, because we're going to pull back. The 15 minute is going to determine that. If the 15 minute says we need to go down, but the hourly says we need to go up, then we're going to go up. If the hourly says we need to go up, but the 4 hours says we need to go down, then we're going to go down, and so on. The higher time frame will always trump the lower time frame, and that's basically the way you want to be utilizing this. You want to stick around the 5 minute for the most part for those intraday trades, but you want to be checking your 15 minute to just confirm bias and make sure that you're not in the middle of a move on the 15 minute that would actually mean a lot more than that 5 minute move that you're trying to get into. In an ideal world, they all align, they're all going the same way, and it makes it easy for you. But there will be times that, of course, they don't quite align the same, or there is just not a lot of support from the other time frame. Like here on the 15 minute, once you got those two moves going, there wasn't a sweepable here anymore. The sweepable became here, and it never got swept. And then let's see, is that a sweepable here too? Yeah, so that the CISD is here, the sweepable is there, and it never got swept. There's the CISD here, high, low, higher. So that's a sweepable, but it never got swept till here, right? But once it got swept, it already changed directions up here. So it met objectives. It made a change instead of delivery to the downside. The chart already changed directions. But if you're stuck on the bias that it's going to keep going up because you're in the lower time frames, you're going to miss this detail. You're not going to know that's going to drop anymore. And you're just not going to be willing to switch your bias, and you're going to get eaten up on the charts when it does this. So yeah, that's it for the class. I will be trying to bring some more stuff next week that is a little bit different. One thing I haven't touched on is macro windows. I want to make a whole video for that specifically because people don't know how to use the macros at all. So I'll be looking forward to that. And yeah, I'll upload that on Monday.